let's get into the economy and the economics a little bit. Jared, you talk a lot about that. What was your view? What were you guessing coming into the election in terms of like election result and what that would have meant economically? And then what do you see now with the current situation and what that means economically?
Well, going into the election, I was publicly refusing to make any predictions, which, there were too many variables. I think privately, I thought that Biden would win and it would be close. In terms of the economy, we're probably not going to get any tax hikes. If we end up with a 50-50 Senate, it's possible. But I think even with a 50-50 Senate, you're going to be able to peel off some Democrats who won't vote for taxes. So I think tax hikes are unlikely. I think spending is likely. And, with now that we have a vaccine and we're going to get several vaccines over the next couple of months, we're going to have a whole bunch of vaccines. It's a completely different environment today than it was just a couple of days ago. And we've seen a big rotation out of growth and into value. 2 days ago, we had the biggest outperformance of value versus growth ever. And that rotation is going to continue for a long time. One thing about markets is that they take a really long time to price in. You could have said on election day in 2016, the stocks were up like 4%. You could have said, okay, it's priced in. But then stocks went up another 40% over the course of 2 years. So this is going to take a long time to get priced in. I'm very bullish on equities in this scenario. In terms of the rates market, there's really not a lot to do. Yields have been leaking higher a little bit. It brings in the Fed and yield curve control and stuff like that. But, I'm very bullish for the economy. I mean, we could see 4% GDP once the virus is resolved.
Interesting. I take it, Elle, you look skeptical.
Well, I'm a little bit less.
You were talking about, well, it's going to be long. It's going to take a longer time until we get past COVID. We can expect more of a boom in the technology and the digitalization and that. So it sounds like you're a little more skeptical than Jared on that. Is that?
Well,
correct?
I would love for this vaccine to work and to be ubiquitous tomorrow. But on average, it takes 10 years to produce a vaccine. We've never produced a vaccine in less than 5. So for us to produce a vaccine that works really well in less than a year, that's going to be a miracle. I hope to God it is a miracle. But if it's a miracle and we get this Pfizer one works and then more and more work, that seems like an awful lot of miracles. I hope to God that it does happen. But I'm not counting on it happening immediately. And even if these do, we're still really early days. I mean, this Pfizer thing was less than 100 people, and it showed no proven efficacy over the severe cases. That's what we're really worried about, because neither the placebo group nor those given the vaccine actually developed severe cases. And on top of that, like we were talking about with George Will, this is the actually getting this vaccine to people. That process is going to take a lot. We've never done anything like this in the world as far as inoculating this many people very quickly. The Pfizer vaccine is also a very difficult one. 80 degrees Fahrenheit. So it's not a simple thing to get done. So I think if we're expecting to see the economy rebound in Q1, I think that's extremely optimistic. I think we're seeing a bump because everybody is really happy and really excited because there's hopefully a light at the end of the tunnel. And a week ago, my God, there really wasn't much of a clear light at the end of the tunnel on this thing. So that's great to see. But I think right now the market is getting ahead of itself and a bit more optimistic as to just how quickly this can actually happen. Right.
Let's circle back. Jared, you mentioned value blew out the doors last couple of days. We've got, as a side note, a sort of value versus growth debate with Kathy Wood and Rob Arnott later. You said you're bullish on the economy in general. Are you bullish on value long term? Value obviously has gotten crushed for years against growth, and it's only been exacerbated in the last year with the sort of COVID effect of rapid digitalization. So what are your views on that and how that aligns to COVID as well?
Yeah, I mean, I think there's an inflection point here. If people are not that smart, okay? And what I mean by that is, this would have been an easy one to figure out. Like 3 months ago, somebody could have said, gosh, COVID is really bad for value stocks. It's bad for box retail. It's bad for energy. It's bad for basic materials. And it's really good for growth in tech. It's good for Peloton. It's good for Amazon. It's good for Netflix. If we got a vaccine, maybe you would see a resurgence in value stocks, and nobody made that prediction. Everybody was caught totally by surprise. As I said, this takes a long time to price in, but what that move that we had 2 days ago was like a 20 standard deviation event. I mean, it wasn't statistical noise. So I do think that this is the turning point for value over growth. I'm willing to go on the record and say that. Personally, I've been sort of accumulating value stocks for the last 6 to 12 months. In the last couple of days have been great, and I think there's more to go.
So Elle, what do you think about that thesis, Jared's thesis, the broad thesis?
I think it's beyond just value versus growth. I think what we're seeing is this was a catalyst that changed the base premise, and what we're seeing is a reversion to the mean, because we also saw small cap stocks massively outperforming large cap, and that has not happened in a very long time. So we're seeing everything that wasn't working suddenly. If you look from the pandemic on, and even for small cap and growth, you look beyond that. Everything that was not working for quite a long time, all of a sudden worked because the base paradigm shifted. But like I said, I think it's a little bit early to be guaranteeing this. And just because we got news on one vaccine having efficacy in, I think, 48 people, I don't think we're all the way there yet.
Elle, the other day when we were talking, you got into some interesting international territory, I thought. And I also want to bring that to you, but I also want to bring it to Jared. Elle said, and again, part of this is COVID driven. China right now has no COVID. Asia basically has no COVID. Australia has no COVID. And she sees that as being very bullish for the Chinese economy. And China is likely to outgrow the West over the next, I think I'm characterizing this as right. Elle, you tell me if I'm not. Do you agree with that? And what's your outlook of international stocks versus U.S., emerging markets versus developed markets, regions that are unaffected by COVID or have beaten it down versus regions where it's raging? How does all that come together for you in your mind?
Okay, I think one of the things that's really good after this election for China is that we're going to see less of a trade war. And while I totally agree with Jared that we're going to get some spending, we're going to get some fiscal stimulus, I think with a divided government, it's going to be less than it could have been had there been a blue wave. We won't get quite the spending. So I think there's going to be more push back onto the monetary stimulus side, which is bad for the dollar. But if it's bad for the dollar, then that's good for emerging markets, and that's good for those emerging economies, because those emerging markets have a ton of US dollar denominated debt. And if we get a lot of monetary stimulus without as much fiscal stimulus, that'll suppress the dollar. That's great for them. The lack of a trade war, also great for those emerging markets, great for China. If we have a more moderated approach, shall we say, to dealing with China.
Yeah, that's interesting. I guess, what is your view on where we land with Biden on trade? I'll hand this one to Jared. Obviously, Trump pushed back hard against China. both parties have been very much free trade, the Republicans more so until very recently. I'm wondering kind of what your outlook is on trade and politics around that as well. Is populism now tamped back, or is that going to push that kind of policy forward in the future?
Well, first of all, I want to say, what Elle said about the dollar in emerging markets is absolutely correct. I could not have said it any better. I mean, that was just a fantastic analysis. So I totally agree with that. When it comes to trade, Biden is perceived as being pretty dovish on China, and I think it's easy to say that until he gets in office. And I think that there are myriad political forces that are going to push him to continue to be hawkish on China, just like Trump was.
I think so too.
Whether it's populist or not, I think it's just really a matter of pragmatism. When you're talking about human rights abuses and stuff like that, we're gonna continue to take a hard line on China. So I don't think things are materially different under Biden.
How about you, Al?
So it makes a market, right?
And
I think that's great. That's what makes a market, having the differing opinions.
yes. And what do you think about the outlook of European versus North American versus Asian? And again, like Elle and I think have experienced firsthand like wildly different policy in Europe around COVID, and in Asia around COVID, and in the US around COVID. And so like, to me, this is like a really interesting once in a lifetime study of kind of politics and policy and what that does economically. So what's your take on where we sit in different regions?
I think Europe is the European banks were already on a cliff edge before all this happened. And even if we get this vaccine and we start getting it distributed in the first quarter, it's going to take time to get it widely distributed. So we're going to continue to have, even with Sweden, right? Sweden didn't do the lockdowns, but they effectively had the lockdowns as far as the economy was concerned because everybody just stayed home. They were scared. I'm in Italy, and we are back to roughly 80%, I would say, of the full lockdown that we had the first time around. All the restaurants are closed. All the hotels are closed. You look at, in the US, you look at TSA. The TSA is down at like 60, 70% below where it normally is. All of that has been going on for a long time, and that is a lot of money lost. And forget the stock market. Let's talk about the small and the medium-sized businesses, because that is what really drives the economy. And those businesses are getting killed, utterly destroyed. And those guys owe the banks money. So within Europe, you already had banks that had a whole lot of bad debt on their books that they were kind of just hoping to God could sort itself out. I think there may very well be a big push to nationalize the banks. That could cause some really interesting things going on in the financial markets. I think you still have some similar things in the US, because these companies, I'm not sure how the economy really goes robust when there was already a ton of debt, record high levels of debt, and then you crashed the economy. There was no growth, so you couldn't pay on that debt, and the debt's still accumulating, and your payments are still accumulating, but you have no revenue coming in. We still have activity is really low compared to where it should be. Worse in Europe, I think, than in the US, because the lockdowns have been more severe, and the banking system in Europe was much more of a disaster. And it's a lot more complicated in Europe, because you can't just go to the Fed and get something done. You got to get everyone to agree to it, and that's going to be a lot more complicated. So I think the European Union is going to come out probably weaker than the US will out of this. And then you've got Brexit added in, which is making the whole thing even more complicated and ugly. So I think the US will come out stronger. Asia is going to come out probably the strongest out of it. The US in the middle, and Europe probably the weakest.
So you'd be bullish on Asia for like, what's your sort of time frame that you're looking at?
I would say the next 6 to 12 months that I think emerging markets are going to do better, because if we do get this vaccine and activity can get started, And while I agree that I think there's going to be a lot of forces in the U.S. to not just say, hey, China, it's all good, let's hug it out. That's probably not going to happen. But we're dealing with someone in Biden who's a diplomat. Right? He's been on Capitol Hill for over 40 years. He's not going to be conducting foreign policy via Twitter. So no matter what, it's not going to be as aggressive as what we saw with Trump. So I think even that will just calm the markets down. So I think those emerging economies will benefit from a calmer approach.
Can we talk a little debt? A lot of debt.
A lot of it to talk about.
I mean, I'm flabbergasted when I look at the state of the world. And by the way, like the US, even before COVID, and so like we had a huge financial crisis, which we bailed out. And then even after that, we raised the deficit further in a healthy economy, like insane, like no one even cares. Is there a wall that we run into at some point, Jared? Like, what is your view on fiscal policy in the world right now, and in the U.S. in particular?
Yeah, in the U.S. and Canada. Canada's deficit is actually worse than ours, believe it or not. But, I remember when I was in fourth grade, it was 1983. And we used to get these current events film strips, and then we would watch these current events things in class. And every week, all they could talk about was the deficit. And the deficit at the time was $180 billion under Ronald Reagan, which was about 5% of GDP, which was high but not egregious. Now we have a deficit to GDP of 15% in peacetime. It's the highest deficit we've ever had in the history of the country in peacetime. Now we do have a pandemic, but still, we're gonna do another stimulus. There's gonna be successive rounds of stimulus. There's gonna be infrastructure spending. So the conclusion of this is we're gonna get to modern monetary theory, and we're almost there right now. I mean, basically, if you take out the bond market as an intermediary, what you basically have is the Fed printing money and giving it to the government. Now they're just kind of doing it through the bond market. So there's no voice in politics that is campaigning on fiscal conservatism. And I don't see it happening in 2024 either. And the amazing thing is that back in the 1980s, people were freaking out about the deficit and it wasn't that big of a deal. Today it's much larger and nobody cares. Nobody cares.
So where does it end, Elle? Where does that lead us?
Well,
and when?
I think what we are going to see, and this is not something in the next 6 to 12 months. This is much longer term, more like the 5-10 year time horizon. But to your point on the modern monetary theory, I think one of the frustrations central banks have had is that it is a very blunt instrument. You've got the fiscal side, it continues to be a mess in much of the world, just really can't get out of its own way, and it's very ineffective. On the monetary stimulus side, it's a very blunt instrument. So when you have one group where you really need to charge them positive, or you need to have positive interest rates for them, say the savers, like the retirees, they need positive interest rates. But then on the other side, you would like to have some negative interest rates to have them not save on that. There's no way to do that. I think what we are going to be seeing, and it's already being talked about an awful lot, is this shift to digital currency. Because if we have a centralized digital currency, which I know that's a bit of an oxymoron, but if you have central banks shifting to more of a digital currency, they actually have an ability to engage in behavioral economics. They have an ability to be very focused, and where they're giving Jared a different interest rate than they're giving Jim. Where they can maybe get Jim, we want you to spend, so we're going to give you a negative interest rate. Jared, we'd like you to save, we're going to give you a positive interest rate. It actually has that ability if we get down into that digital. And you see central banks already talking about this and looking at it. Now, the downside is it means even more of an end to privacy because of the way transactions can be tracked. But I think it may just be inevitable.
Any thoughts on that, Jared?
Well, I mean, since we're talking about digital currencies, all of this is super bullish for Bitcoin. It absolutely is. And the other thing about digital currencies is that it makes it very easy to implement negative rates. So that's another possibility. And it's hard. The Fed has rejected the idea of negative rates. Trump was campaigning for it hard, and everybody at the Fed said it was a bad idea. If you have negative rates of any more than about 75 basis points, then people start to hoard cash. If we're all using digital currencies, that ability goes away, and you can implement, very deep negative interest rates.
Interesting. We have an audience here, so we only have like 3 minutes. So this is your chance if you've got any questions for Jared or Elle. Otherwise, I'm going to ask Elle. Okay, so I'm an investor, and I want to put all my money on a number on the roulette wheel. That's not how I invest. But if I was going to do that, what would that number be? What is the asset class or investment area that is under that number in the next year?
I'll give you two things. So depending on how strong your stomach is. If you've got a strong stomach, I would go on the Bitcoin. If you're not so strong in the stomach, then look at the digital infrastructure play. Because no matter what happens with the economy, what happens with the pandemic, more and more of our lives are going into the digital realm. And all the pandemic did was really accelerate that. These were changes that were happening, but instead of happening in years, they happened overnight. Rather than trying to pick which companies are going to be the winners and the losers going into the digital world, look at what it is that enables that a digital world to actually happen, the infrastructure behind it. Because regardless of whether it's Netflix or Disney Plus, both of them need the infrastructure actually to serve their end customers.
Okay, what's your number? Jared?
Actually, I agree on Bitcoin for sure. Wow. Yeah, I mean, we agree on that. I'm just going to go back to what I said earlier in the segment, which was that I think value is at the beginning of a long bull run, particularly energy. I mean, it's just simple supply and demand. We're going to have more people driving. We're going to have more people flying. We're going to have more energy consumption. We've taken a lot of supply offline. There's been a lot of drilling rigs that have stopped production. A lot of the fracking has quieted down. So, we could have $60 oil in 6 months, and I think that's actually kind of conservative. So,
what are your thoughts on energy, Elle? What are your thoughts on clean energy, alternative energy, old school, petrochemical? What are your thoughts on kind of where we sit? We're obviously in a very fluid political environment right now.
Yeah. Long term, I'm very bearish on crude. Looking at green energy, it's all about batteries, because I think we're going to get more and more decentralized, both power production and power storage. Right now, particularly in the U.S., and this is to Jared's point on infrastructure spend, one of the most vulnerable parts of the U.S. economy is the energy. We've got this highly centralized system, which we all know that's an extremely vulnerable system. I think it was back in like 2011 when you had the West Coast get completely wiped out. We were out of power for like 24 hours or so because there was one problem with a relay station in Arizona, and it wiped out millions, like tens and tens of millions of people who were without power. So I think that green energy, which one, how it works, that's both a game of the technology, but it's also a game of the politics. And I find those very difficult to play. But what I do know is going to happen is going to be the need for this distributed storage. So that's looking more at the the battery technology, because in that you have the energy that's generated distributed with the solar, right? And then it can be stored in a distributed manner so that you're not so dependent. A single house or a region is not as dependent on a very centralized
Well,
source.
selfishly, I wish we had all day, because I've got another 20 questions I could ask each of you. I hope both of you and everyone in the rooms enjoyed this as much as I have. Really fun.